This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has released 179.01 million metric tons of crude import quotas for 2024, according to Chinese industry consultancies and trade sources on Tuesday, 60% more than the previous year. 41 companies, mostly independent refiners, were given the fresh quotas, with some of them allotted full-year allowances, trade sources and consultancy JLC and Longzong said. The quota issued in January last year was 111.82 million tons. Privately controlled Zhejiang Petrochemical Corp., the country's single largest refiner, was granted a quota of 40 million tons, in line with its annual processing capacity, while Shenghong Petrochemical, another privately led refiner, was granted 16 million tons, which is also a full-year quota, the sources added.
International oil prices are likely to stay near $80 a barrel in 2024, a Reuters poll showed on Friday, as analysts predicted weak global growth would cap demand, while geopolitical tensions could provide support. The analysts questioned whether the Organization of the Petroleum Exporting Countries and Allies, OPEC+, would be able to sustain supply cuts to support the market. The global benchmark Brent crude has averaged around $82.17 a barrel so far this year and was poised for an over 9% yearly decline as a strong US dollar boosted by a high interest rate environment and subdued demand from top consumer China weighed.
Moving on to the top news in the energy sector.
Oil prices jumped 1.5% in the first session of the new year, due to potential supply disruptions in the Middle East after a naval clash in the Red Sea, and hopes of strong holiday demand and an economic stimulus in China, the top crude importer. Brent crude rose $1.20, or 1.5%, to $78.24 a barrel by 0438 GMT, while U.S. West Texas Intermediate crude was at $72.66 a barrel, up $1, or 1.4%. A Reuters survey of economists and analysts predicted Brent crude would average $82.56 a barrel this year, slightly higher than the average of $82.17 in 2023. Analysts forecast that weak global growth would cap demand, but expected geopolitical tensions to provide support.
Nigeria's upstream oil regulator on Monday announced an annual oil and condensates production target of 2.6 million barrels per day, BPD, by 2026, an ambitious jump from 2023 levels of around 1.6 million barrels of oil per day. Africa's biggest oil exporter, Nigeria has suffered declining production due to crude theft and vandalism of pipelines in the Niger Delta, as well as low investment in the sector, which has hit government revenue. But President Bola Tinubu's government says oil majors have committed to invest $13.5 billion in the short term following his meetings with senior executives from Total Energies and Exxon. Next, we have the top news in metal markets. Gold investors anticipate record high prices next year, when the fundamentals of a dovish pivot in U.S. interest rates, continued geopolitical risk, and central bank buying are expected to support the market after a volatile 2023. Spot gold is on track to post a 13% annual rise in 2023, its best year since 2020, trading around $2,060 per ounce. Following on from a surprisingly robust performance in 2023, we see further price gains in 2024. Driven by a trifecta of momentum chasing hedge funds, central banks continuing to buy physical gold at a firm pace, and not least renewed demand from ETF investors, Saxo Bank's Ole Hansen said.
Copper prices in London edged up on Tuesday, helped by a better manufacturing data from China and hope for stimulus from the world's biggest metals consumer. 3-month copper on the London Metal Exchange, LME, rose 0.3% to $8,584 per metric ton by 0420 GMT, while the most traded February copper contract on the Shanghai Futures Exchange, SHFE, eased 0.3% to 68,780 yuan, $9,652.79 per metric ton. China's factory activity expanded at a quicker pace in December due to stronger gains in output and new orders, but business confidence for 2024 remained subdued, a private sector survey showed.
We will now look at the top news in the agricultural sector.
Chinese coffee consumption is growing quickly, spurring cutthroat competition between local and foreign coffee chains that have opened thousands of branded shops in recent months and surpassed the number of coffee stores in the United States. Analysts expect China's growing thirst for coffee to be a key driver of future demand for the beans as coffee shops expand beyond Beijing and Shanghai to dozens of mid-sized cities where young professionals have warmed to the beverage. China's rising coffee demand is an opportunity for international chains like Starbucks and Tim Hortons that are investing heavily in China, though they face a steep challenge from rapidly expanding local brands. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.